So I'm sitting here on the beach in Thailand and I started thinking about Cramer, you know, this guy right here. And I'm like, God, I wonder how good he is. I started digging into some research about Cramer. I think you're gonna find really interesting. So I'm gonna head into the hotel room and I'll make a little video that I hope you love. Stay tuned. So Jim Cramer, very famous entertainer, used to run a hedge fund and did actually really well. And now he's basically an entertainer that punches all these buttons.
I would not sell Denny's. Call me a buy of that chain.
And does all this crazy stuff on TV. And you know what he does? He sells ads for CNBC. That's what he does. He gets advertisers to advertise on his program. But if you use this guy for your investing picks, you're probably making a big mistake. People that live in glass houses shouldn't throw stones. And I'm not saying I'm right on my picks. You know, quite the contrary. I'm wrong half the time, right? But the idea is to get the probabilities in your favor. And so if you don't have a system to get probabilities in your favor, you're just going to be like Jim Cramer. And so what we want to do is we want to start using systems and methodologies that are going to get the probabilities in your favor. Because this guy's a professional, used to run a hedge fund, and he's wrong. Let me show you a couple articles that I think you'll find interesting. So here's an article from askmoney.com. How good are Jim Cramer's picks? And this came out just a couple weeks ago, November 27th, 23. Now, again, I don't want to bash the guy for his picks because that's really not what he's getting paid to do. But it highlights the point that when people are out there picking stocks, they got a 50% chance of being right. I don't care how good they are. I got a really good methodology, and I ain't better than 50% when I pick the stock. It's what I do after I pick the stock that makes all the difference in my trading. But in Jim Cramer's case, he's saying buy the stock. So let's take a look. How good are Jim Cramer's stock picks? Now again, I don't want to bash him. I just want to point out that statistically, he ain't that great, and that's okay because he's an entertainer. His accuracy when judging his written calls in a column for New York's magazine landed around 47%. Well, you could do better than 47%. All you got to do is find a stock and buy it, right? You got a 50% chance of being right. The person that sold it to you got a 50% chance of being right. So you right there, you got a 3% edge over Cramer because he does all this homework and research and he's got all these teams and he's still only right less than half the time. So what am I saying here? Well, I'm saying that if you put your money at risk for somebody that just makes picks, that's not a really good strategy. And I believe now, after I've gotten my butt kicked many times in the stock market, that there are better strategies to making money over the long term. And I believe in cash flow, right? I'm not a dividend investor. I'm not just trying to make money on CDs or bonds because that's been disastrous, right? The safe money has been the worst money over the last couple of years. But I am saying that you can utilize stocks to pay your rent. But here's an article that came out, and you can see the date here. It's October 20th of 2021. So it says, buy Netflix after the streaming giant's post-earnings slide, says Jim Cramer. So, okay, the stock went down, and he's saying, hey, it's an opportunity to buy, right? Shares of the streaming giant fell 2% to close the session at $625. Remember that number, $625. This guy, Jim Cramer, is saying, you know what? Let's use it as a buying opportunity because it's down 2%. When you see Netflix pulling back after a very robust set of numbers and lots of price target boosts, where management laid out a compelling long-term strategy, you need to look at it as a gift to buy, not sell, says Jim Cramer, the Mad Money host. Okay, this is the day where I put the big arrow on the right side. This is Netflix's chart, and this is the day, October 20th, 21st, somewhere in there, where the stock went down a lot, right? So you see that big arrow pointing that day. It's $625. You see that right above there? $625 is the closing price. On huge volume, that's telling you something. Whenever there's huge volume and a big price decline, it's telling you something. Okay, we don't know what it's telling us yet because we're not Nostradamus. But let's take a look. This is up to the 21st. Let's take a look. I'm going to put it, I'm just going to reset this to today. And here we are in 2 years and 2 months later, essentially. And let me put it on a weekly so you can see what happened since that day. This is basically October. This is that week right here, okay? And you can see it's right around that $625 price right there where that line is. Of course, it went up a little bit. So he got lucky. It did bounce a little bit. It went up. But it was telling you something when it had a high volume sell-off. And take a look at what happened after that. It went from $600+ and it plunged on the next two earnings releases, right? It wasn't so much of a gift, was it? And it plunged, and now the stock went down to $160. So you'd have lost 75% of your money if you just used this buy and hold strategy. Now, if you're a day trader and you made money over the next couple of weeks because you bought it and sold it, all that stuff, and you knew that it was going to go down, great, good for you. I'm just saying, Jim Cramer's not a day trader. He's like a buy it, hold it for a long time, and see what happens. Here we are 2 years and 2 months later. That stock is at $486. It's still not even up to 3/4 of where it was when it dropped. Okay, so what's my point? My point is, again, not to bash stock pickers because stock pickers are right 50% of the time. Me too. My point is, what happens after you buy a stock or sell a stock? But after you buy a stock, well, I think you got to have a strategy, right? I mean, I think you should have had a strategy when this thing went under, the 10-week moving average. But that's all hindsight. What if you don't have hindsight, the benefit of that? You're trying to figure out things going forward. Maybe you got to buy it today. Well, I have a strategy called the cash flow machine. And what we do is we buy the stock, and against the stock, we sell calls against it. Now, I'm not saying we're right on the stock direction. I'm saying, but while we wait, we make 1% to 2% a week. So think about that. Here we are 100+ weeks after that. If we'd have made 1%.
Well, let me just show you what 1% would look like. I've drawn a graph here with Netflix, which is the blue line. That's the stock price. You can see it drop precipitously after that, like on the other chart. And then I've got two other lines. The one line is for 1%. That's the orange line. And then we have a gray line. That's 1.5%. Now, in the cash flow machine, we shoot for 1% to 2% a week. So let me show you how your thinking shifts when you just focus on the income or the juice. At 1%, that's that orange line. So you'd be back up to right around where the stock is now, just a little bit below it, but you'd still own the stock to still be able to make income on it. So that's pretty good. You're still owning the stock, but you're still collecting income. So you'd be kind of even versus being down, 25, 30% from where the stock was. Okay, that's bonus number one. But bonus number two is if we only get 1.5, I'm not even doing 2% a week, and that's of the stock price as it dropped. Look at what the value would be. It'd be almost back to that 625, which is where this whole thing started. You'd be even, and the stock's still down 25%. I just find that amazing if you change your mindset to an income mindset.
You would have not avoided all this if you just listened to Cramer. But if you had listened to Cramer and had a cash flow machine strategy, then you would have, be making money while you wait if you're a buy and hold investor. So why just buy and hold or buy and hope? I don't know why people do that. They just wait for the stock market and inflation to bring the stock back up. And eventually, Netflix is a good company. It'll probably, in the next year or so, probably go back to 625. But you would have lost 3 years while you waited instead of making 1% on the investment. All right, so what are the summaries here? Well, first of all, Cramer is an entertainer, not a stock picker. Second of all, you got to have a strategy after you click the mouse to buy a stock, right? You got to either have an exit strategy or an income strategy or some kind of strategy. I like having cash flow, and it's like buying a house. So here's how I look at it. Like you buy a house for, let's call it $300,000, okay? And your goal is to buy the house, not live in it, but rent it out to somebody. And so you're going to rent it out, and you're going to get $3,000 a month, let's say, okay? That's 1%. So you're going to get 1% a month. Well, that's 12% a year. Pretty good investment. Do you care that the house went to 340 or 280 or 260? You kind of don't care because you're in it for the income. But if you buy it because you want to buy the stock at 300,000, buy the house at 300,000, and you want to flip it at 400,000, but the real estate market collapses and it goes to 200,000, well, now you got to wait 10 years or 3 years or whatever for the real estate market to come back up, and you've got no income coming in on the property because you bought it to flip it, right? So it's a different strategy. It's a different mindset. We invest for cash flow. And I think cash flow is a great defensive strategy, and it's a really good offensive strategy. If you can make 1% to 2% a week, and I'm not saying we always do, but we always make 1% to 2% a week in income. And if the stock goes down, you're still at least making the 1% to 2% a week in income while you wait for the stock to come back up. All right, I beat the dead horse. I hope you enjoyed that. It's a little bit fun to kind of make fun of Cramer, but he's an entertainer. So see you on the next video.
Hi, Mark Yegge here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But you know, if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.